Welcome to Maxwell Brand presentation. My name is Ahmad Moradi. I'm the Chairman CEO of Maxwell Brand Inc. Our company has been around since 1996, serving wealth management strategies with presence and doing historical work in investment banking, where we have operations in Europe and we have wealth management companies in Switzerland. And in today's market, we are focusing on utilization of artificial intelligence, best use of algorithms for financial market, creating wealth management strategies for our clients. We have shareholders and we have investors and we have companies that we have acquired, both public and private. We have taken private companies public and we have taken uh, public companies private. And we hold it as our portfolio. And when it arrives, we divest it into other companies and we proceed into relationship, partnership, and establishing a new paradox of opportunities. The areas that we get involved is mostly in areas where I have spent tremendous amount of my time, such as telehealth or health information or media or technology or various aspects of investment banking and so forth, from BFIS all the way to integrations. So with that in mind, today's presentation is really targeted to our cash investors. Those are the companies and individuals, accredited investors, that they are only interested in investing into a pipe that we created as Nestor Pipe. And what I'm about to explain is about the subject of how Mr. Pipe can help you to become an investor, that you have several options, so to speak, within that parameter, and you can utilize it, that it mitigates risk, it creates a win-win-win situation with a greater ROI, and we have put that into various protocols and methodologies, and we'd like to share that with you. So with that in mind, I'll start the presentation. Here is Maxwell Rent. Max AI is a line of our services that we've done over the years, and now what we are doing is transforming it into a productization. So within the productization, we first introduced what we call Mr. Pipe, that is going to be launched in 2023, and our target is working with really just cash investors that they want to have a growth opportunity with a predictive ROI and make sure that investment are risk mitigated and it's giving a better opportunity. So with that in mind, we're going to go into our presentation and share some of those thoughts with you. So let's take a look. Before we start doing anything, we looked at some of the areas such as VC market. As you can see, several years they had high days, and recent years after COVID, there's been a decline in VCs. And one of the areas that we looked at it was, how do we look at their portfolios? One of them is that they normally have three baskets of portfolios. One is what they call the write-offs, the other one that is stagnated, and then they got their high flyers. With their high flyers, obviously they make up for the losses and they keep going forward and they create the next capital round of the capital, and then they proceed accordingly. So this was for the fintechs companies, obviously, and then we also looked at the inequality in wealth. So we discovered that a lot of times leading companies that they have greater resources, organizations, and so forth, they capitalize and use artificial intelligence to accelerate their wealth management. And we felt this is something that we can bring to the marketplace by tilting the opportunity and making that available to certain segment of the market that we serve. So with that in mind, again, AI is one of the foundation of what we look at. In most recent, uh, what I call period from January 2023 till now, there's been a great publicity about a technology known as Chat GPT. And chances are you may have heard of it or read about it or even played with it. But the general idea is utilization of technologies such as RFLH, which is known as reinforcement learning from human feedback technology, and let the system learn from its own self and be able to become more knowledgeable. And through that knowledge, you create the transformation of a better solution, better ideas, better way of looking at it that otherwise you would be handicapped, or it would take you years to accomplish those kind of situations because of the compilation and the massive amount of the data that it exists in the marketplace. So with that, again, those were some of the concerns and considerations that we looked at it when we were building the Max AI. But the main goal and objective is that when we are working with institutions like governments, TV federations, publishers, telecom, media industries, enterprises, entrepreneurs in different market segments with their own niche from health to legal around the globe, we intend and have continued because of my background in PhD studies since 1986 until now, is to apply good AI and then capitalize on technologies that we have brought and introduced to the market, like intelligent video streaming with real-time video first strategies, and helping them to enter into areas what is known today as digital economy, that with their IP and their monetization and digitization of their products, services, and etc., they can create a new chapter in their wealth strategies. So the first thing we did is we looked at the traditional pipe. And a pipe is known in industry by the investment bankers, by the guys that they've been in the brokerage houses and raised money, or the officers of publicly traded companies such as myself, where we needed immediate cash or shortage on the cash flow, and we had to go into a pipe players. So we looked at pipe, but we first and more importantly wanted to put this question of pipe out there in the marketplace so everything becomes data driven. The result was we learned that 80% of people don't even know what pipe is. So that made it very interesting. So that's one of the reasons we took this educational approach to first educate the investors and the market at various layers and say, what is a pipe first, right? So we posted the definition by saying that private investment in public equity is known as PIPE. And normally, the way that it's been traditionally been done is a private investment in public equity is a buying of shares of a publicly traded company at a price below, remember, below is deep discount with the current market value per share. And this buying method is a practice of investment firms, mutual funds, and other large accredited investors that they basically become the pipe. And a traditional pipe is normally used as either common shares or convertible preferred in order to accomplish this kind of debt or obligations with the lender, as an institution into the company in exchange for their shares. But the purpose of PIPE is really just designed to help the companies and the CEOs and the management to raise capital for the public company without really going through a lot of compliance and secondary offering and registrations and so forth. So we looked at that as a short part, and then we said, what if we stretch it and make it into a digital twist with a long pipe? So the CMV traditional cash pipe on the left shows you that they are deeply discounted shares. They are registered, free and trading shares, or have very limited timeline restriction. They give you drawdown equity line, and possible short and naked shorter are going to become part of the living standards that you're going to have. Because once they have the shorts, their CMV is mantra is if they bring you down, they make money because you give them more shares. And when they go up, they make more money because you have more valuation. So they make money on both sides, not from that deep discount, but in more than that. So the more one draws, the more shares firm needs to issue at the strike price of that CMV. So if a month or two you raise a few $100,000 from your drawdown equity line, and now you're going to go and take a few more $100,000 now, that CMV, that price of your shares, is going to have a determination on that. but these are mostly for the public company, remember, you're trading. So Mr. Pipe, with digital twist, we said, okay, what if we take that methodology and algorithm and apply it into a 24-month time cycle and make it into an asset based with vested interest? In other words, just putting the cash in the hands of the investors. We capitalize it with the paid capex as a platform that it enables them to get to a next generation of technology and bring them into a 10x capability where their valuation can be impacted. We can create a new monetization, create new KPI, and give them also ability to borrow if they need money to raise money and so forth. So with that, our cash investors become the paid capex service providers, and those platforms are residing at the designated data centers, as was shared earlier with you, that what we are doing. So with that, what we decided to do is taking all of those variables and putting them into a series of algorithmic methodologies and apply that into a protocol where we feel they can create the greatest outcome for cash investors, for our companies that we invest, and for Maxwell Brand shareholders. So taking that into a consideration, what we decided to do is offer a series of wealth management strategies. And the first one is going to be presented to you is Mr. Pipe. In this presentation, Mr. Pipe is the crown jewel of our topic. We are proud of it because it is right now being put into motion for the sake of transparency, because we work with publicly traded and private company and SPVs. Everything is documented, handed over to the internal audit, to the compliance group, and at the same time, once they sign off, then they become part of the process that we handed over to the finance committee, and finance committee where your cash investors are placed, approve, and then the process begins. So the main idea for Mr. Pipe was the power of digital economy, capitalization of use of this market forced us to create or go to some of our portfolio companies that we have funded them and been instrumental in their wealth strategies and making that pipe available. So Maxwell Brand Investment is based on paid capex, a platform that it goes into a virtual private cloud. It hosts there with those IP and locations of the services and so forth will become part of what we call UCC, if you will, for Uniform Commercial Code, where you can put it like a leasing cloud financing together, where we are already talking with cloud financiers that they are doing this kind of things and creating a greater investment and asset-based platform. Along with that, that they can basically get into a new stream of income opportunities with through the paid platform and get into a fast track with digital economy. We all know with these changes that it's been happening rapidly, the fourth industrial revolution is bringing the digital economy. But at the same time, this fourth industrial revolution is creating challenges for traditionalists. The traditionalists that they are not used to understanding these rapid changes are kind of complex and they don't know where to go. So with that kind of a process, we really try to bring the value pack as a shareholder, as an investor into those companies with the cash investment that we make, that the skilled know-how, the seamless integration of technology, the business savvy, and the video-first strategies can become the way for the hybrid global market. And that is very fundamentally important because that gives them a gateway to $30 trillion digital economy, working with institutions and organizations that they can bring the metaverse and they can bring Web 3.0 and all of this into a generated procedure that they can create new monetization that otherwise would not have been realized. IMD is a school in Switzerland. They do a lot of research. Harnessing industry for all for greater good is something that we have taken at heart, and we've been doing it for decades. But for now, we became primarily focused in promoting the fourth industrial revolution with digital economy, and as a paid capex to our cash investors that they can place their funds and we can use it either in fraction or in full for the investment into those. So it's not just about blockchain or Web3 or these kind of things, but you also have to understand when people are moving into those kind of a roadmap, they are just talking about the tip of the iceberg. And that's one of the reasons in this illustration, we presented you with different shades that you can see from here going all the way down, that there is more than the tip of the iceberg. It's a lot of technologies that you have to be aware of. And these are new generation of people that are coming together, that created a new way through blockchain and so forth to embrace the quasi between what we call centralized versus decentralized format. Another area that is worth mentioning is the area of um, media and entertainment, like Hollywood with variety magazines and so forth. They're creating platforms called VIP Special. These are intelligence, as you can see, circled out as a platform. So digital economy cannot and will not run without platforms. So the platforms becomes the basis and the foundation of all of these assets that we're talking about. Now, countries have taken initiative that they have taken precedence to build policy statement and development for virtual assets, such as Hong Kong, Dubai, and many other countries that they're moving into this stratosphere. So expect this is going to happen. It's going to be regulated. It's going to be managed. The virtual assets have to be pretty much like your physical asset, interchangeable from one to another. And taking those into a consideration becomes very important. The people that they are coming to the formation, like us with those digital pie, meet those compliances and enable them companies that we are working with, either in Hong Kong or Southeast Asia and their countries, they can create that. So it's not only about the United States, we work globally as Mr. Pipe Investment. Now, platforms, again, some of the people who don't understand what platforms are, streaming platforms or platform brand has become very, very important in the marketplace. But without platform, you cannot run, you know, technologies that you are taking granted, such as Facebook is a platform, Twitter is a platform, Netflix, Hulu, all of these. So taking that into consideration, then you have what is called transportation cost. And transportation cost has to be mitigated. So through technology and intelligence, we build protocols that it can do what we call edge delivery. And that is basically taking the cloud and bringing it closer to the consumers at various regions and working with hyper-skilled service providers, and then enabling that becomes the point of delivery for us and for the clients and our assets. So when they come online, obviously profitability becomes part of the equation, but just like every other business, you got a little curve, and this curve normally goes from carrying the losses till a break even, and from break even, then you get into the profitability. Example of that is showing you from NBC that how they took their streaming into a profit zone. And these are, again, documentation articles that we can share with you, send you the presentation so you can click on them for the hyperlink and learning more about it. But one of the areas that is extremely important and people have to understand is the power of streaming into metaverse and Web 2.0 and the compilation of several other leading technologies that it's all happening. So this streaming and the market is diversifying and will continue to do so because players like Hulu, Roku, Apple TV, Disney, all of these companies are in there and they all want market shares. So part of that process for us is to understand that these are the leaders and they're showing the trend of CTV. At the same time, CTV brings technologies called first-party data along with what we call data clean rooms, that it enables companies to move into those stratosphere that they recently made announcements. And then there are companies that they have filed bankruptcy because they fell into their platforms. But at the same time, as you can see, organizations that they see value, they are prepared to acquire those assets And this is one of our recent transactions called Voyager that they bought it from bankruptcy court for $1 billion. The other transaction that you probably have heard so much about it is a platform sold to Elon Musk called Twitter for $44 billion. So as you can see, investors don't mind investing in platforms for digital economy because it also gives them a safety and security. But this is basically a typical wall configuration. It's not all of it, but it just gives you a visual consideration of how platforms connected together and how it works. Another thing that you want to get is validation by the industry, such as Interactive Advertising Bureau, a nonprofit organization out in Washington. And they are telling you that data clean room is the way to go, but it takes a significant investment. It's not a short-term investment, it's a long-term investment. So these discoveries enabled us to say why Mr. Pipe becomes an investment strategy for its cash investors. And one of the other things that we observed recently was data centers are becoming very attractive because they're asset-based. They got equipment, they got technology, they got racks, they got switches, routers, and so forth. So private equity floods into those data centers as investors because they find it as a safe haven. So take a digital pipe and put in the digital assets into those data centers. Now it gives the investors, cash investors, a great opportunity that they can basically look at it as an alternative, as a part of their portfolio, not everything. So Mr. Pipe really is designed to take the heavy burden of capital investment and share that with our shareholders where we create a real revenue stream and opportunities and return. And Mr. Pipe offers cash investors a greater predictive ROI while risk is mitigated by investing in asset-based platforms offered to qualified companies as a digital pipe. Mr. Pipe also provides invested companies with the fast-to-market leapfrog in the digital economy. The timeline up to 24 months is really the time that we look at it as an exit strategy, and we'd like you to work with us. And then if you want to reinvest, then we can consider the investment. But this is the roadmap that we are looking at it. So what we did is basically looked at some of the areas, such as a company that we raised money and they worked with us very heavily. And I happen, for the sake of transparency, be the CEO president of the company, NETSTAIRS, where we took the tree of technology, the tree of knowledge, and transformed into tree of technology. And we built that into what we call interactive content delivery network. It's a multi-billion-dollar investment. We spent heavily on it with being Google's fourth innovative, four-star innovative service provider and partner. We have housed this in many platforms, but GCP have become the main catalyst for us to accomplish that goal. So with that, we create the investment opportunities of taking your capital, put it into an asset-based investment that it helps sit as a financial with a predictive revenue to create growth. Mr. Pipe is designed to help the invested companies and the investor gaining footprint in the digital economy with a favorable ROI and being steady at the same time. Mr. Pipe places paid capex, so the cash that you give us, we buy the capital expenditure on those licensing and right, and we use that, pay that vendors and the licensors and the third parties, and that becomes the investment. We take that investment, put it inside the company, and we enhance their balance sheet in a tax-free share exchange. When we receive those tax-free share exchange based on your participation, you can stay with us or decide that we will transfer those shares or a portion of the shares to you. If you're a fractional owner, then you become fractional shareholder. If you are a full underwriter, then we transfer the entire shares to you with that consideration. So your investment helps the digital asset as paid in capital, goes inside their economy. And then investment opportunities that comes, basically, we look at those as a protocol for growth in the next, what we call immediate impact and a 24-month impact. So here is what we've done. What we do is we take the knowledgeable investors that they have worked with us and they're putting their cash investment with us. give them immediately a 50% discount on their equity buy. So if they were putting in $100,000, for example, we give them $200,000 worth of shares of that company as portfolio. Okay, that gives them a 2x immediate return, okay, whether they're booking it or they're holding it as their portfolio. Mr. Pipe invests in the funds, and what we do is as we liquidate yours. So therefore, in the next 24 hours, you will be liquidated, but with the hope and the work with the shareholders and their company that we will hope to increase them up to 10x. So therefore, we can give you a greater return. Now, here is what it does basically. So you choose and Pipe either as a full or a fractional investor, and we take that as the digital assets, place them as an investment inside the public or private companies. This will be disclosed fully to you in advance. Or if you put it into the pool of our portfolio, we'll just make that decision and provide you with the buy, and the investment is tied to a selected portfolio companies, and you will receive those 50% discount and your 200% immediate ROI. Then, at the time of sale, we hold your portfolio for a designated period with agreed lockup time that we have with the company. And when we sell or margin your PIPE investment, then you can liquidate or reinvest as you deem necessary. The way it works again is suppose you like a company or a project that it was presented, and you can become selective or you can become in the pool as mentioned. With the company shares that is sold, let's say at $6, Mr. Pipe comes in and places from $30 million into their company. So our minimum investment is 30 and up, just to let you know. So your investment that you're putting with us, it will underwrite only part of that $30 million. If you have the pool of funds, like we have done already with two of our tycoon families, they are the underwriters. So therefore, you choose your investment, and then with that 50% discount, you automatically $6 becomes $3. So therefore, the quantity of the shares that it comes to you automatically gives you the 200% ROI instantly. Now the whole time, up to 2 years, depending on the terms and the contract and the compliance and the management, we get into a predictive ROI, and we offer up to 300% return into that scenario. And that becomes part of the process. So the way that it works, it's a digital pipe, and this digital pipe has two components, what we call the blue section and the green side. Our cash investors, they place their funds into the private equity side, on the PE side. The PC side becomes a portfolio company or companies, and then we stack them up in that kind of a category. So this is the way we are building this wealth management. And then based on that kind of a protocol, we connect the two pipes together through a secure tax-free share exchange, and then we become the shareholder. So now that you have a general understanding of how Maxwell Rand protocol works in digital economy, the protocol that really becomes a win-win-win situation is where the capital, distribution, technology, and wealth strategies are in full motion. And that's what we are doing right now. So public versus private pipe, your investment can be isolated, or you can say, I want to put it into only public companies, or you can say, I want to put it into a mix, or you make decisions or selective deal flows. But normally what we do is we look at this kind of growth strategy because our exit strategy and our cash out as Maxwell Grant is liquidation of those shares that we have as our portfolio at the maturity date. So therefore, we look at startup zone, we look at growth stage, we look at next tech stage, and we look at startup marketplace as what we call the 20% market share. While publicly traded companies that we work with, they are mostly on the development stage or growth stage or expansion stage. And in occasion, we work with maturity or mature companies through what we call our sweet spot. So we are not into concept, we are not into pre-seed, we are not into the seed capital, So the minimum size of the company that we work, and we have cloud financiers and so forth available for them, is the development stage companies. So in short, I want to thank you for watching our presentation. This was a gateway for us to show you how we are working uh, with our cash investors and how we are going to create this full cycle. And again, as mentioned, everything will be in full compliance and transparency and maintained for any kind of a record examination as we work and produce new clients and explore new cash investors that they will participate with Maxwell Brand. Thank you. We wish you a great and wonderful uh, investment opportunities during 2023 and more. And be safe. And if you have any further question, please feel free to contact inquiry@maxwellbrand.com, or you can visit maxwellbrand.com and reach us through the forms. And we'll be more than happy to set up a private session into a virtual rooms like this, where our data clean room is ensured with privacy and security. Thank you. Be safe. Ciao.